Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of public negativity masking real gains. The US economy grew at a faster pace than previously thought in the fourth quarter of 2015. This according to the latest official figures. It grew at an annualised pace of 1% in the quarter, compared with the initial estimate of 0.7%. Most economists had taken a more pessimistic view, expecting the figure would be revised downwards. This surprise will likely flow into sentiment, equity markets and currency markets later today. Real US growth in all of 2015 was 2.4% higher, the same level it recorded in 2014. Also released on Saturday was the US inflation measure preferred by the Fed, the PCE, or Personal Consumption Expenditure Index. American consumers are facing the strongest inflation pressures in a year and a half, a sign that economic vitality there is likely to be welcomed by the Fed. The cost of products from housing to medical care to furnishings increased in January, and petrol prices, the primary driver of deflationary pressures in the past 18 months, are falling at a slower pace. As a result, inflation gauges are moving quickly back towards levels recorded during most other economic expansions. They rose 1.3% year on year, and that's their fastest rate in 3 years. They're up 0.5% in January alone. And Warren Buffett released his annual letter to shareholders over the weekend, and as usual, it's an intriguing read. It has been a record year for Berkshire Hathaway. One thing Buffett did say is that the campaigning politicians have it all wrong about the state of the US economy. In an interesting analysis, he says that young people entering the US workforce today are more likely than ever before to earn considerably more than their parents, a view at odds with both the Republican and Democrat presidential contenders. And in a statement dripping with unintended irony, the world's G20 economies declared that they need to look beyond ultra-low interest rates and printing money and renew their focus on structural reform to spark higher economic activity. Of course, almost everyone signing that communique is responsible for close to 100% of the world's QE. Another way to look at this is to see it as an admission that low rates and money printing are failed policy. In the end, the G20 meeting was also a failure to act, so the focus is back on the disparate group of central banks to get us out of this trap. At the very same meeting, the boss of the Chinese central bank signalled that China has room for lower rates and more QE. In New York, the benchmark US Treasury 10-year Euro rose at the end of last week to 1.76%. The oil price is a little higher at $33 a barrel in the US, while Brent is at $35 a barrel. And the gold price, however, is $24 lower at $1,220 an ounce. New Zealand dollar will start the week at 66.3 US cents, 93 Aussie cents, and at 60.7 euro cents. The TWI will start at 71.5 and still in the range that has been with us all year. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.